What's up, everybody? This is Joe from Support and Resistance Trading. I wanted to make a video today talking about the basics of day trading options and how I actually day trade options. The way I day trade options is significantly different than what a lot of people actually do in terms of options trading. So if you know a lot about options trading, what you're going to see here is what I do is not very or even remotely close to the way most people trade options, since I am actually day trading the options. So let's talk about start from scratch. Let's say you didn't know anything about options and you were getting into stock trading and you started to learn about candlesticks and the market and all this stuff, but you were like, oh, options is very interesting to me and I want to learn how to actually trade options. So the first thing I'm going to do is I'm just going to pull up an options chart and let's talk about what an options chart is. Okay, so down here, this is Thinkorswim. If you're not familiar with the brokerage Thinkorswim, it's a really great brokerage for trading options. Yes, it is expensive at first, but you can just email them for a little bit cheaper commissions after you show that you've traded with them for just a little bit. I traded with them for about a week before I emailed them and got way cheaper commissions because I came over from Tastyworks. And trust me, I do not have a lot of equity inside of my actual account. So don't think I have $50,000 or $45,000, not even remotely close to that. And they still lowered my commission significantly. And in about a month, I'll probably email them again and slowly start decreasing my commissions, with them. So they're a really great brokerage. If you're just starting out, it is okay to start with Robinhood. They're also fine. Yes, they are free. Tastyworks is also very good. I like them, but I started to get a little bit frustrated with trading with Tastyworks and then using the charting of Thinkorswim. So I just finally came over and I'm pretty much equal with the commissions of a Tastyworks over here at Thinkorswim, and I'm happy with just staying with them. So that's a little, backwards about what I was talking about. But again, Tastyworks is fine. Robinhood also fine for learners. And then slowly start to, you'll really want to start to be in something like Thinkorswim, or a lot of people also like TradeZero if you are not in the United States. All right, so let's get into what options are and how I actually trade options. So I'm going to open up an options chain, all right, and this is what an options chain looks like. So there's two sides to options, okay? There are the calls over here, okay? So you got the calls, and we got the puts over here, okay? So calls and puts. So keep it simple. If you know basics of the stock market, a call is saying you're going to go long on the stock, which means you think the stock is going to go up. All right? A put is the opposite. You believe that the stock is going to go down. All right? So call means you want it to go up. A put, you want it to go down. And what you see is with these option chains is you have a lot of ones to choose from, okay? And I've limited it to the next 30 days. And this one gets a lot of people, oh, which options are you trading? Which blah, 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 blah. Listen, I always trade the weekly options of the week. What that means is these options, okay, expire on Friday. You do not want to be holding these all the way to the end of Friday, okay, because they will be executed. And if you don't know what execution means, it means that the contracts, right, will be executed, and then you'll have a margin against you, or you'll be trying to be pulled from an account, or vice versa, and I'll get to that in a little bit. All right, so I always trade the weeklies of the options. So if today is Monday, let's say it's Monday of this week, I will be trading these all the way up until Thursday, and usually Thursday, depending on how volatile the market is, I will start trading the next week's options, which will be the May 3rds over here. Okay, because Thursday, Friday, I'll start to switch. But so options are pretty much a contract for you to buy stock later at a set price. Okay, so this is what gets a lot of people, all right? So we're looking at Disney here, and you'll see in the middle we have strike prices, okay? These are prices you're looking to buy the options for later on. Don't worry so much about the strike price here, okay? What you want to worry about is we have the blues over here, which we call in the money on the call side, and these blues over here, which we call in the money on the put side. These guys we call out the money, okay? These we call at the money. And you'll sometimes hear the first line in the money, right? Called first in the money, or there's other weird terminologies, right? So we got in the money, out the money, in the money, out the money, the call and the put side. And what you'll see is a lot of other things here. We got the bid and the ask, right? The bid is what people are trying to sell for. The ask is what I mean, what the ask is what people are trying to buy, to sell for, and the bid is what people are trying to buy at, right? And usually you'll have to usually buy actually at the ask if you want to get filled sometimes, or you can get filled in the middle between these two, or if you're really lucky, you can get in on the bid, which is really nice. All right. Then we have the delta. I'll get into the Greeks. We have the volume, which I always watch, the net change once in a while, and then the last sale that these contracts sold for. So you see the ask and the bid, 223, 206, and the actual last sale was at 210. Okay? So, all right, so let's get into the actual deltas and the Greeks. Everybody is so obsessed. Oh, the Greeks. You got the delta, the gamma, the theta. I think there's Vega, right? All these other Greeks. Listen, the way I trade options, the only one that matters, and it kind of really doesn't matter that too much, is the delta. What the delta means is this delta right here, okay, is the amount that the option will increase by every dollar the stock moves. For example, Disney up here closed today. This is obviously Friday. The market's closed at $132.40. If the stock moved up $1 to $133.40, this contract would go up by 56 cents. Okay? And people are like, man, 56 cents, what are you wasting? What you need to do is take these options, okay, the bid and the ask, vice versa, and increase them by 100. Okay? So multiply these by 100. So what you're actually paying, like right here, if I actually click to pay this, the contract, right, is 156, between 156 and 149, the bid and the ask. And what this will cost me is $156 and $149, not $1.49 and $1.56. Because contracts are for a section of 100 shares of this stock. Okay? So let's get back into what an actual contract is. Okay, so I don't want you to have to go to 8 other videos to understand, the basics of what a contract is. A contract is for you to allow you to buy stock at a set price at a later date. And what you're going to be able to buy or sell, whatever, right, is the 100 shares of that actual stock. So, Disney, for example, this is for next Monday. You pay $156 to buy this. This is called a premium. All right? And what it would allow you to do in the future, okay, is buy Disney at $132 regardless of what it's actually trading at. For example, let's go a little further up. Disney is trading at $132.40 right now. Okay? You bought these contracts. Okay? By Friday, at expiration, if Disney's still trading at $132 and you wanted to execute this contract, you were able, after you paid your $300, you were able to buy Disney, okay, 100 shares of Disney at $130, regardless that it's actually trading at $132.40. Hopefully that made sense, okay? So again, you are buying this contract with a premium of $300 or $281, depending on where you get in, okay? And you can buy at this strike price, which means you can buy Disney at $130 a share for 100 shares. Okay? So what a contract is just, it's literally like a contract for you to buy shares at a later date. Okay? And what people say, all right, that's on the call side. That means the stock's going up. The put side is the exact same. Disney, okay, goes down. So what you're able to do is sell the shares for more money, if you had shares, for more money at a later date. So let's say Disney goes down, right? You bought Disney a while ago at 135, which I never actually hit. But let's say it went to 135, and you bought these a while ago, and now Disney goes down. You could sell, right, this contract, and you're making the premium based on the strike price of $135. So if Disney's at $132.40, you can sell your 100 shares at $135. Okay? Again, making that difference of about $2.60 per share at 100 shares. So $260. That's why roughly these contracts are that difference, right, guys? Okay? Right? The reason that they're a little bit higher is because obviously Disney can go up or down, and these things will go up based on the delta that you're moving. Okay? So based on the delta of the stock. Like Maybe the stock goes up $1, so maybe in this contract it will go up $77. This one will go up 67 per dollar. This one will go up 56. This one will go up 43. This one will go up 31, and etc. And on this side, it's the exact same way. Okay, the side is the exact same way. The reason is on the put side, you obviously want the stock to go down. On the call side, you want the stock to go up. All right. Hopefully that clears some basics of with options, the call side and the put side. Okay. Don't overcomplicate it, guys. You either want the stock to go up or you want the stock to go down. All right? And where do I buy? Which contracts do you buy? Do you buy way out the money down here or way in the money? No. Listen, I usually buy the first in the money or the first out of the money. Okay? First in the money here, first out of the money. Okay? I don't need to buy one way up in here. Okay? Yes, you can, sure. I like the risk and reward of buying ones right here, right at the money. Okay? These two, right at the money. All right, I look for a delta about 50. That's pretty good. This one's 50, 56, 57. Good. And sometimes I'll buy the first one out the money if I'm trying to get a couple more contracts and I'm looking for a shorter move. All right, that's it. I don't worry about gamma. Don't worry about volatility, the vega. Don't worry about any of the theta. I don't worry about any of that. Okay? I just worry about the delta. The other Greeks don't matter because I am buying a single leg. A single leg means I'm just going to buy a call or put. You've probably heard about all these other types of contracts, right? I haven't even heard of some of these because I've never traded, but you got the iron condor, the butterfly, the covered, the strangle, the straddle, the diagonal, the calendar, the vertical, right? I just buy a single leg. I just want the stock to either go up or go down. I'm not buying a spread, none of this crazy stuff. You can trade that, sure, there's people that do, but when I'm actually trading is I literally just trading that the stock's going to go up or stock's going to go down. So that's what an option chain is, guys. Okay? Don't overcomplicate it. Either buy this one or buy this one. That's what I do. Buy this one or buy this one. If I want to go up, right? Or if I want to go down. Very, very, very simple. Okay? This is the basics of day trading options. And as I said, as we get closer towards Thursday or Friday, I will go to the following week. Okay? Because why do I go to the following week? It's because options decay. Okay, it's due to theta, but it doesn't really matter because I'm only in it for about an hour, hour and a half, max. Okay, so options decay. So maybe the actual stock is going up, and you're on the call side, but it's going up so slow that your price is actually going to be going down because you're getting closer towards that expiration on Friday. So that's why on Thursday and Friday I'll just go to the following week. Don't overcomplicate this. Okay. Following week, I'll just go to the next one. That's all you got to know. All right? This week, if it's on Monday, Tuesday, Wednesday, and even sometimes Thursday morning, I will trade these guys. Okay? I will trade these guys. You don't need more than 6 strikes here. I'm not need to go way in the money. All right? I don't need to go way in the money or way out the money. Don't go way out the money here. All right? These hopes and dreams that are way out the money usually aren't going to work out. And when the stock moves $1 or $2, which is a pretty normal move on a stock, you're only going to get about $22. Unless you're grabbing a ton of contracts and you're really hopeful for a massive move, usually grab the ones right here at the money. Okay, guys? At the money. All right, so that's what an options chain is. And that's the basics of day trading options, guys. It's really not more complicated than that. You either buy a call if you want to go up, a put if you want to go down, and you buy the ones at the money, all right, for whatever you think you're doing. And in the future, I'm starting to make videos to display the 5 strategies that I use. I've already made a video on the first basic strategy I use at Open for you guys. It's the VWAP tap. And there's other ones that I'm going to get to that are very simple. All right? I don't overcomplicate this. I just want it to be simple because it works. Okay? Because it works. All right? So this is the basic of day trading options. Okay? And this is how I kind of have my setup on Thinkorswim to be able to day trade. I like to watch all my stocks at once. Because I'm on a 43-inch TV, so for you guys watching this maybe on a laptop or on your phone, you're like, wow, that looks super congested, but I will zoom in so I don't have to flip back and forth between my watch lists over here. All right. So the next thing I want to get to is which options or which stocks do I trade? You know, do you trade based on volume or what? I like to trade usually, okay, plus or minus, usually the same 10, max 15 stocks, okay? Max 15 stocks. So here was what I was trading last week. All right. BA, which is Boeing. If you don't know about Boeing, it has a lot of news lately. Usually I'll be trading Boeing. Netflix, because obviously all the news with Netflix and Disney. Tesla, Apple, BABA, Nvidia, Facebook, Disney, and I was trading, watching. I didn't trade Lyft. Okay, there are other ones I will trade here. All right, and I'll go to my watch list. I think I got it right here. This is main list, and these are kind of the ones I'll kind of pull from. And there's some here I'll get rid of. Go Amazon, Google. Haven't really traded them because their contracts are just stupid money. All right, but they're ones you can trade if you have a little bit more money in your account. Boeing, Netflix, always have the SPY on my chart. Tesla, HD, Home Depot, Apple, BABA, Facebook, Baidu, Cat, Microsoft, Walmart, Target, Starbucks, Roku, CVS, I can get rid of that because I haven't traded that in a while. Twitter, DSW, you can also get rid of that. BBY I was trading because all the news, and Cron I was trading because all the news about pot stocks. But usually these are the main. Here's Intel. These are the main stocks I'll trade. And once in a while I'll add a stock, like hot this week was, if I can actually type today, was Qualcomm because of all the news with Apple. So, I will add one or two to the list, but usually the main stocks that I'm watching are the main stocks you've all heard of because those ones move enough intraday, to actually allow me to trade them, right? And get enough of a move. What do I mean by enough of a move? I don't want to trade something that barely moves. I don't want to be in something like Lyft, all right? So Lyft's over here. That moves maybe $1, $2, okay? That's fine. But if I can get into a move, something maybe like Nvidia, which I know moves way more in terms of its actual multiple times during the day, a high of 188 to a low of 185, a $3 move, I can make a lot more on something like Nvidia for very low risk, okay? Why else do I trade these more stocks? Because they're more liquid. When we look at the contracts, okay, these guys have a spread, right? That bid-ask spread. It's like about $10, and this one first out the money is only $7, okay? Right? I want this to be as tight as possible. If you look at Apple, okay, the closer this is, the less risk that I have in terms of slippage, right? Because I was talking about the buying and the selling and where you buy and your sell, right? You don't want these to be so far apart where they're 50 cents apart. I'll pull up a stock that's really far apart in a little bit, but right, 294 to 305. You can get in the middle here, and you're wasting about $5 or $6 based on the spread. Look at these down here; they're $2, $1 difference. And Apple, when it's moving really slow once in a while, will really close up that spread, and you'll get about $1 to $2 spread. That's why you want to trade it. Look at the volume here. Look at this volume. This is something you don't want to trade. Okay, Dick's Sporting Goods. Yes, you would think it would be good. Look at the volume. Right? Look at the volume. The spread, $15. Look at this one, $40. You can't trade this. You're going to lose your movement on your delta of 67 just due to slippage, right? Just due to the spread. So you really want to trade something that are liquid, guys, and have a lot of volume shared. The main stocks, right? Disney, right? I was just showing you Disney earlier. Look at that, 2,000. Facebook, okay? Also, very liquid and a lot of volume, 3,000 shares. Nvidia, BABA, they're all going to have a lot of contracts, right? And the spreads are going to be marginable, right? The more expensive we get, the more spready they get. But, look at this right here, $7, okay? Totally doable. Obviously, this is out the money. But as the stock's moving out today, we're obviously at the close, so these things get a little spready. But they will close up. They'll be $5, max $10, okay? You want to trade stuff that has a lot of liquidity and has a lot of volume so you can get in and out relatively quick. You don't want to be trading these snail stocks. I only trade top of the line stocks. I'm not trading these penny stocks. You can't trade something, like BPTH, okay? If I can actually type. In options, right? Look, first of all, it has no options. You can't trade these penny stocks. They really don't move. Here, HMNY, I don't know if this is a stock I used to trade when I used to trade penny stocks, right? Look, it's not even 30 cents. Wow, that's crazy. Let's try, what was another one? Hunt, RBZ. That was one that was pretty volatile recently. $6. Look, doesn't even have options, right? So I trade the name brand stocks, guys. I trade the name brand stocks. All right. So this is my short video. Well, not really short, but my video is a basic 101. How do I day trade options as simple as possible? Okay. You can do this from Robinhood if you want. You can do it from Thinkorswim. You can do it from any brokerage that you use. Okay. Because it's just buying single options, right? Either the calls or the puts. And usually, as I get into my strategies in the coming weeks, or next week I'll put up one, right? I'll show you that I usually carry 1 or 2 or 3 or more than a couple contracts, because I can start to level in and level out of my trades and start to actually decrease my risk. And I'm going to also make a couple videos about risk here, all right, in the coming weeks. All right, so this is a nice little video you can check out if you're new to options and you want to understand what options are, because you've heard a lot about it and you're tired of trading the penny stocks and you want to try something that's a little bit more easy to understand. And why is it easy to understand? Is because big institutions trade these stocks, guys. Let me pull up here. I can show you on my charts. I'll just pull up one stock. We'll just show you Disney. Big institutions trade these, guys, so they follow more obvious patterns, right? You don't have these chat rooms pumping and dumping. You can't pump and dump something like Disney. It's got millions of shares traded. It's not a low float stock, right? Look at the average, 18 million shares, okay? It has a lot of shares traded, and there's a lot of liquidity in this stock. So you're not going to get a room just pushing around these stocks. You can trade very nice setups on something like Disney or something like Apple, okay? Because they move very nicely. And everybody that are massively, like these big hedge funds or stuff like that, or big brokerage firms, are trading things like Apple, right? They're trading things like Twitter. They're trading things like Disney. So they follow really nice technical analysis, and everybody that's trading these are watching the technical analysis, are usually trading exactly the way you are. Okay, they're not randomly pumping it and dumping because people are quickly getting in and out, using hotkeys, on these low float like RBZ and DRYS a couple years ago, and Hunt and BPTH. All right, trade the more liquid stocks. They're a lot easier to follow for beginners. And I'm not a beginner. I've been trading since 2015. I wouldn't call myself a beginner after 4 years of trading. I'm definitely finally, after all these years, really understanding and definitely profitable and growing my account. But what I want to share with you is just all this stuff that I had to go through to get to this point that I understand options. I started with options initially, and I went to penny stocks, and I was on SureTrader, and I was in chat rooms, and I was in all this stuff, wasting money, until I finally found what worked well for me. And these are these 5 basic strategies I'm going to show you in the coming weeks. I put up one, and I'll put up the others, and I just want to teach you, as a teacher, I want to teach you how to trade these things, right? It's very, very simple. People overly complicate it. They want to use all these big terminologies and all these names, so they think you have to be, a crazy person that went to MIT to understand the stock market. All right? You don't have to. You just be a normal guy like me. You can understand and put in the time and effort to watch and look at stocks and watch the charts and see how everything reacts and understand some simple candlestick formation. And you could be profitable trading these, guys. Day trading options, as in my opinion, after I've traded a lot of stuff, it's the best way to make money with very, very little capital. You don't need 25 grand or all these margins accounts. I trade on a cash account, and it works great. All right, so this was my video, Day Trading 101, options, okay, day trading the weeklies. And in the coming weeks, I will be making more videos for you guys. And I hope everybody has a wonderful, wonderful Easter and a wonderful weekend. If you have any questions, just comment below. Please like and subscribe my channel. That'd be great for me. I just trying to grow, the information. There's not a lot of really quality videos on day trading weekly options. There's a lot of options videos and people trading spreads, but there's not a lot here on actually trading weeklies and using options to day trade and actually being profitable with these, not just trading the news. Okay, so I thank everybody. Have a great weekend, and I will see you all next week in the chat room if you're in our chat room. If not, I will see you on YouTube. All right, thanks everybody.